If you were born before 1965, the IRS may owe you a refund check right now, and most people your age will never claim a dollar of it. Not because they don't qualify, because nobody told them the money was sitting there. There is over $1 billion in unclaimed refunds waiting at the IRS. And the typical amount is close to $700 per person, sometimes far more. But there's a deadline, and once it passes, your money doesn't roll over. It's gone for good, transferred straight to the U.S. Treasury. Stay with me, because I'm going to show you the one form that pulls this money back. The exact deductions seniors are missing, and the date you cannot afford to cross. The first step takes about 10 minutes. And before we go further, there's a brand new deduction for 2026 that the IRS just confirmed, worth up to $6,000, that most seniors filed without ever claiming. We'll get to that in a moment, because it's the one that puts the most money back in your pocket. Why the IRS is holding your money in the first place. Here's what almost nobody understands about how this works. Every year, money is pulled out of your paychecks, your pension payments, your Social Security, and your retirement withdrawals before you ever see it. That's federal tax being withheld in advance. If the amount withheld is more than what you actually owed, the difference belongs to you. That's your refund. But the IRS does not chase you down to hand it over. If you didn't file, or if you filed and missed a deduction you were entitled to, they simply keep the difference. They hold it for exactly 3 years. After that, it's no longer yours. No appeal. No exception. It becomes government property. For one recent tax year alone, more than 1 million taxpayers never filed and left over $1 billion in refunds unclaimed. A large share of that money belonged to people over 60. Now here's where it gets important for anyone born before 1965. Because there are 3 specific ways you may be owed money, and the third one is the biggest. Money path number 1. The brand new senior deduction worth up to $6,000. This is the one I promised you, and it's the most valuable. So write this down. Starting with the 2025 tax year, there is a brand new deduction created specifically for Americans aged 65 and older. The IRS confirmed it for the 2026 filing season. If you are 65 or older, you may claim an additional $6,000 deduction. If you're married and both spouses are 65 or older, that doubles to $12,000. This is on top of every other deduction you already get. With stocks. And here's the part that matters most. It's available whether you take the standard deduction or itemize. You don't have to do anything fancy to qualify. The full amount applies if your income is under $75,000 as a single filer, or $150,000 for a married couple. Above those levels, it begins to phase out. But here's the catch that costs people money. If you already filed your 2025 return and didn't claim this deduction, and millions did exactly that, the money isn't lost yet. There's a way to go back and get it, and I'll show you how in just a minute. Money path number 2. The credit almost no senior claims. There's a second pot of money, and this one has existed for years. Yet the number of eligible seniors who actually claim it is shockingly low. It's called the credit for the elderly or the disabled. Pay attention to the word credit because this is different from a deduction. A deduction lowers the income you're taxed on. A credit lowers your actual tax bill, dollar for dollar. A credit is more powerful. You qualify if you're 65 or older, or if you retired on permanent disability, and your income falls below certain limits. The credit is claimed on a form called Schedule R. Here's the secret most people never hear. The IRS will actually calculate this credit for you. You check a box, fill in your income, and they do the math. But most tax software doesn't flag it automatically, which is why millions of eligible seniors walk right past it every single year. If you qualified for this in any of the last 3 years and didn't claim it, you can still go back and collect it using the exact same form I'm about to show you. That form is Money Path number 3, and it's the key to everything. Money Path number 3, the one form that pulls it all back. This is the form I told you was the biggest, because this single document is how you recover everything from the last 3 years that you missed. It's called Form 1040X, the amended return. And it is the tool the IRS itself tells you to use when you left money on the table. Here's what makes it powerful. You have 3 years from the date you filed a return to go back and fix it. That means right now, in 2026, you can still amend your returns for 2023, 2024, and 2025. If you missed the new senior deduction, if you skipped the elderly credit, if you forgot a medical deduction, this form reaches back and claims it. The form has 3 simple columns. One shows what you originally reported. One shows the change. One shows the corrected amount. You only fill in the lines that changed. Attach your proof and send it inches. You can file it electronically for recent years. And if the IRS agrees you're owed money, they mail you a notice confirming your refund is on the way, usually within a few weeks of approval. The IRS even pays you interest if they hold your refund too long. And this is the deadline I warned you about at the start. That 3-year window is closing month by month. Let me explain exactly what that means for your money. The deadline that makes this urgent. Here is why before it's gone is not just a catchy phrase. It's the law. Your right to claim a refund expires 3 years after you filed that year's return. The oldest year you can still touch in 2026 is rapidly approaching its cutoff. Once that date passes, any refund from that year, no matter how large, no matter how clearly you were owed it, vanishes into the treasury. You cannot get it back. Ever. So if you have any year in the last 3 where you didn't file, or where you filed but missed a deduction or credit, the clock is running. Every month you wait is a month closer to losing money that has your name on it. Now let me show you exactly what to do, step by step, so none of this slips away. Your step-by-step action plan. Step 1. Pull out your tax returns for 2023, 2024, and 2025. Lay them side by side. Step 2. Check each one for 3 things. Did you claim the additional standard deduction for being 65 or older? Did you claim the new $6,000 senior deduction on your 2025 return? And did you ever attach Schedule R for the elderly credit? If the answer to any of these is no, you may be owed money. Step 3. Don't forget medical expenses. If you itemized in your unreimbursed medical and dental costs, hearing aids, dental work, in-home care, long-term care premiums went over 7.5% of your income. That's a deduction many seniors never claim. Step 4. Download Form 1040X from the IRS website, or open it through any tax software. Fill in the years you're correcting. Attach your proof, and submit it. Step 5. If any of this feels complicated, you don't have to do it alone. Call the IRS directly, or visit a free taxpayer assistance center. There are also free tax help programs for seniors across the country that will do this with you at no cost. Let me leave you with the one thing that matters most. This money is not a gift, and it's not charity. It was withheld from your own income. It already belongs to you. The only thing standing between you and that refund is a form and a deadline. If you were born before 1965, go check those 3 returns today, not next week. The new $6,000 deduction alone could mean a meaningful refund, and the 3-year window will not wait. And if you know someone over 60 who files their own taxes, send this to them. One form could put hundreds, even thousands of dollars back where it belongs, in their hands, before the IRS keeps it for good.